Welcome back to the channel. Look at this. We were just talking about this. Ripple highlights custody as core infrastructure for $18.9 trillion tokenization market. Now, we saw some things come out from the banks. I believe it was about the beginning of this year. I beg your pardon. About the beginning of this year. And they were talking about how they can do custody. They're interested in custodying services. They didn't want to do it. A lot of the bigger banks didn't want to do that themselves. They'd rather have a third party do that for them. It relieves their staff, their employees of one extra thing to get trained on. A lot of the liability will lie with that third party. It's their responsibility to make sure everything's secure and they have top-notch security, which you see. Well, first of all, just XRPL and Ripple already have top-notch security, but they're beefing things up. I told you, it seems to me that they're getting ready for the banks. I'm not joking around when I say that whatsoever. But the banks made that clear. Then another thing, beyond just some of the top banks discussing things like that, we saw the central banks, the leaders, the bank of all banks, BIS, and I believe the ECB also spoke on this. But it's easy. It probably would be easier just to find the documents that came out from the BIS, right? Everybody likes to cover those. And they were talking about custodying services. But just overall, if you remember, even before that time, the BIS had some documents that came out we were reading, and they were saying how they would rather the fintechs, the DLT companies, to do most of the heavy lifting, right? That's what I'm paraphrasing heavily, but I mean, the people still have those documents. They're still in the videos. They wanted the other companies to do the heavy lifting because they didn't want their employees that extra burden. You have to retrain people. They made that very clear, is what I'm saying. So in steps Ripple, of course, a couple of years ago, Ripple started scratching their head and saying, hey, we could do that. In every possible way, Ripple's trying to bring in value into the XRPL, into XRP. In this custodying services, making sure there's liquidity there. That's XRP. Bridge currency, where you can move that value anywhere, anytime that you want. That's XRP. Bridge currency, liquidity, global reach. You hear any of those things, at least when I hear any of those things, I immediately think XRP. That's the only way they get that done. And that's the only way that they get that done in a way where there's absolutely no way the legacy system can compete. And that would be why a lot of people believe the banks are going to be obsolete, which is why I was trying to convey the other day. I'm not sure how eloquent I was, but if you're going to say the banks are going to be obsolete, I would think it would be closer. Maybe we should rephrase that a little bit. They're going to be absorbed into the new financial system. Sure, they need the technology. So whatever they are today will cease to be, but they will still be there. They'll still be in the game. It's just they will be so dramatically changed in the next few years. I won't say 2. I don't know how long it's going to take. But they will be so dramatically changed by the new technologies. DLT, AI. AI is already changing them. Quantum computing, they're some of the first to test it. Remember, I can't remember which bank it was, but remember a bank earlier this year was already testing out quantum computing. So that's a thing now. How many other ones are doing the same, but just in private? So they will be dramatically changed. The entirety of the system is going to evolve. It's just simple as that. It's just a matter of who's going to make a boatload of capital off of this transformation. That's what everybody's looking at now. It's just that we happen to focus on the DLT aspect, but there's many aspects to this game that's going to explode in value and make people a lot of money. Not financial advice, all right? Just my humble opinion from what I'm observing. But Ripple steps in. They see the weakness and they see the void and they can fill the void. So of course they buy a company, a custodying service, and they're strengthening that. So now let's read this little tidbit here and see what they have to say. So Ripple is spotlighting custody as the backbone of digital finance, driving stablecoin adoption. Tokenize that. I don't care about stablecoin adoption. Smokescreen, in my humble opinion. It's nothing. Stablecoins are nothing without the liquidity. They're just a liability, in my humble opinion. I mean, not just my opinion, but also a lot of the top banks. You heard the ECB, you heard the BIS say what? They said stablecoins are not sound money. They said that stablecoins are, even though they're going to use them anyway, but they're still letting people know their position on that. Stable coins are not stable. That's what the BIS said. And they increase the risk of bank runs. It's easier. You just press a button. You take your value out. It's much easier than having to run to the bank like people used to do, right? Right. So it makes that easier. So I'm not really concerned with that aspect. Tokenized asset growth. It says regulatory confidence in next generation programmable infrastructure set to transform global markets. Now, wait a minute. Now, if you were Ripple, if you're Hedera, if you're Chainlink, if you're Solana, all of these I have an interest in. All right. Wouldn't you say to yourself, how could we further have large companies and banks locking up the value of assets on our chains? Wouldn't that be your primary thought, right? The more value that's locked or held on the chain, which is what custodying is, and it depends on how they go about this, but let's look at it two ways. One, if they're locking value up on chain. That's number one. Because could they split that and have a separate mechanism? They could, but at the same time, once you're ready to utilize that mechanism, it's still going to have to go across chain for global reach, for that XRP speed, for the liquidity, etc. It still has to run through that XRP. Everything that touches the XRPL affects XRP's price. That's what David Schwartz said, correct? All right, I'm trying to be as reasonable, as logical as possible. So now, how do you do that? Well, you have a custodying service, right? So you have things like staking. Okay, well, with staking, you're going to have some things locked up on chain. With custody, you're going to have some things locked up or flowing through chain. But it's going to be a much more massive value, especially now that you're getting into all of this RWA tokenization. That's big money stuff. We're talking quadrillions of dollars in value, right? Which is going to be something interesting to watch over the next few years to see how quickly they start bringing all of these massive things on chain. It started a little bit now, but that's a tiny little bit. But at least we know they've gotten a start, right? I would keep an eye on that over the next 1 to 2 years, 3 years to see how quickly that picks up. Then it'll tell you a lot. Your own observations are going to tell you a lot. If you haven't already, I would greatly appreciate it if you click that like button. Now, before we move on, let me address video about 2 videos back. I had a video, it was titled like Bombshell. It was titled something like Bombshell. That was for that third article. I don't think most people made it to that third article. I don't. The third article, and this is important. That's why I said it was a bombshell. And I even put, I generated the image of like an Asian businessman holding, I think, XRP and Bitcoin in his hand, is because that Chinese stimulus, folks, you have to read that article. That was a bombshell. Go back to that video, read that article. The Chinese stimulus could pop off altcoin season. That's major. So I just want to address that very quickly, okay? Because it just seemed to me like a lot of people didn't make it to that. I think a lot of people take the title of the video and they think that it's supposed to be in that first chapter. I always have multiple topics in the video. It'll be an XRP, it'll be something else, it'll be Bitcoin and maybe gold or something like that, typically, right? But anyway, I think a lot of people don't know that. You probably just watch the first chapter. But that Chinese stimulus could pop off altcoin season. That's one more catalyst. If it does pop off altcoin season, I want to know about that, because if I have certain assets I need to move quickly on, I need to observe, okay, they issued this stimulus this day. Okay, the price goes up. Maybe I want to make a few moves. That's huge. Not everything is a long hold. You know what I mean? So that's why that title was such. Just wanted to put that out there. It was on my mind. All right. So now, getting back to this, this is Ripple published insights on August 18th, emphasizing the strategic importance of and then another thing. Let me pause here for one more moment. Another thing, we were just talking about all the different cash infusions that have been going on around the world in these financial systems. Why? Because the reason they have to do a cash infusion, not cash, maybe I should say value infusion. We've seen Japan do it over the years. We know the United States did. Remember those stimulus checks years ago? But what does it lead to? What does it lead to, and why are they doing that? They don't do it if there's no problem. We've seen the UK do it. All of these places are doing it. Now, that goes right into the idea I've been painting, that there is a major problem in the legacy financial system. There is. That's why they have to do it. But I'm showing you it's global. It's not just in the US. A lot of article writers these days, it's like they're focusing people's minds on the US. In a way, I get it. US is hot news, number one. And number two, A lot of people live in the U.S., so that's their primary concern. What's going on in the U.S.? But you can't think like that anymore. We've been in a global society for a long time. So what happens over here and over there, it does have an effect on everyone. What happens here has an effect on them. But I was trying to show that also there. It was important. That was a bombshell, and it was important in a variety of ways, in my humble opinion. To each his own. But yeah, I mean, these are catalysts. If people are interested in those prices going up. So. All right, so now, back to this here. Ripple published insights on August 18th, emphasizing the strategic importance of digital asset custody for institutions navigating the transition to tokenized finance. In a workshop co-hosted with the Blockchain Association Singapore, the firm outlined how custody has evolved from a technical requirement into a cornerstone of financial infrastructure. The discussion centered around custody and cybersecurity, quote unquote, reflected growing industry recognition that resilient custody systems are essential for scaling. Oh, what happened? Bear with me one moment. A giant ad popped up and covered the entire screen. Just bear with me. I don't control that. All right. Reflected growing industry recognition that resilient custody systems are essential for scaling stablecoin applications, enhancing compliance, and supporting cross-border payment networks. A key driver behind this shift is the expanding market for tokenized real-world assets. Have we not been hearing a lot about this lately? The question is why? They're getting the engine started up. I don't know what this is. It's like cranking the engine. That's my cranking the engine motion. They're getting the engine fired up. And they're putting it out there to the people. RWA, RWA, RWA. Are the people hearing them? Are they researching this? This is going to be big. But also, I would say don't let this distract one from the interbank payments, from the bank money. Because I can see how this would do that as well. They're like RWA, when that's a few years down the road. When the bank money is not that far away. Maybe the bank money's a year or two away. Maybe I'm not trying to put a timeline on it. All right. This is something I don't work for these companies. I don't know how fast they're going to work. Okay. I'm just throwing stuff out there. Just giving an example. That's all. But the bank payments come first. So I have my mind focused on that. Take that bank money. Then I worry about RWA later. That's later. It says demand is rapidly increasing, driven by the projected growth of tokenized real-world assets, which are expected to reach nearly $18.9 trillion by 2033, according to a recent report by Ripple and Boston Consulting Group. Hey, if you haven't already and you enjoy this type of content, and you know I appreciate you being here, take those powerful hands of yours, make a little finger right there, a powerful little finger, and hit that like button. I would appreciate that. Thank you. And I said thank you, right? All right. So now let's move on from that to a little bit of Bitcoin news here. And I have something at the end I think is very interesting, all right? So now, this article is titled Bitcoin to $1 Million. Coinbase CEO sees U.S. Reserve as a game changer. There's a lot of confusion on that. U.S. Reserve. It says after 2 days of shallow downtrend, Bitcoin is regaining support and supporters. I was just talking about this the other day. It always does. But I read an article or two, and they were very doom and gloom about Bitcoin. It just makes me question things, folks. I'm telling you. Well, I can't tell you anything, but I'm saying I would be careful out there. I would. That's dangerous. That's dangerous. They made it sound like Bitcoin was over, and I'm saying to myself, why are they writing like this? Bitcoin is still on an upward trajectory. And look at this. Here we go. Bitcoin is regaining support and supporters, including the Coinbase CEO. While the token is trading above the $113,000 mark, Brian Armstrong has made a strong prediction for the token, citing U.S. regulation and global adoption as key drivers. It says Brian Armstrong, the founder and CEO of Coinbase, has predicted that Bitcoin would reach $1 million by 2030 in the, my goodness, what is this font? Quote, cheeky pint unquote podcast on Wednesday with Stripe co-founder John Collison. Cheeky Pint. I'm supposed that's maybe like a UK podcast. Am I correct in that? Cheeky Pint? I believe that's like a local type of verbiage. Armstrong himself shared the podcast clip in an X post, aiding that it is not financial advice. Of course, got to say that, sir. We know. But the way regulatory clarity is emerging and the U.S. government is building a reserve, making this milestone is possible. What I take from that is, who knows if Bitcoin is going to go to 1 million or not. Can it? It's possible, in my humble opinion. It's possible, but what this does tell me, what I take from this is that it can go very high, much higher than where it is now. So we've had big timer after big timer. I'm talking about these people that run companies, large companies, predicting $1 million Bitcoin. I would say that puts $450,000 possibly in the future, some point in the future, not financial advice, like he said. 450,000, I would say, probably will be a safe number it will hit in the future, maybe 500,000. Because they're saying 1 million, I'm not sure that I would have most of my Bitcoin at that time. I wouldn't take the chance. I don't trust these individuals. I just don't. Just my humble opinion. You don't have to follow my path. I'm not asking you to. But if they say 1 million, are they going to hold till 1 million? Like a lot of these will they sell on you? I would think it's more likely that they'll be rubbing their hands together, ready to sell. We don't know when. I'm not attempting to get sold on. I'm not here to lose. I'm not. And for those who were into Bitcoin when it was pretty low, not at as low as, but like $35,000 Bitcoin is not bad. $26,000 Bitcoin wasn't bad. To ride it all the way up to where it is now, and then maybe if you sell a little bit, then you have a little bit left. You ride that on up to 250K, 300K, 350K. I mean, that's not bad, right? If you bought a pretty good amount when it was real low like that, pretty good, right? So yeah, no, I would not take that chance. I would not take that chance. By the time it gets to 1 million, it's a company's game. In my humble opinion, it's a company's game at that point. Anyway, let's continue on here. So his $1 million Bitcoin prediction is rooted in the once impossible dream of America officially holding this token, but that's turning into a reality. Notably, he also added that this digital asset could become a world reserve currency. That's definitely possible. Yes, given the popularity of it, and now you have all these nations talking about having it in a reserve. That's major. So it could become a world reserve currency due to weakening trust in fiat and growing global deficits. For those who don't know, there's multiple world reserve currencies already, so it is definitely possible. If you don't know that, look it up. A lot of people think the dollar is the only one. The dollar is just the primary, and only for now, since there's still been, we don't cover it a lot anymore on the channel, but there's still a hell of a lot of dollar shirking, a lot of dollar dumping still going on. It's slowed down a little bit, but you know how things change in the U.S. So once things go back, if ever things go back to a certain climate, I'll say, in the U.S., BRICS is back on again. Like they'll lay low. Like a lot of countries, they'll lay low on what they're doing until conditions are prime for them to do what they want to do. Make sense? I'm trying to say a lot with saying a little. Can't say too much on YouTube. I'm not trying to take that chance, folks. All right, so now it's not necessary. It says, why does this Coinbase CEO's Bitcoin prediction matter now? After setting a milestone of 124.4K earlier in the month and disproving the Harvard economist's $100 crash prediction, Bitcoin retracted in the last days, currently trading at 113,000, which is not bad in my humble opinion. Notably, the broader market has been under a major correction amid key macro events. Scrolling down, the primary catalyst for this downtrend are the U.S. FOMC meeting minutes, initial jobless claims data, and Powell's Jackson Hole speech. That's interesting to say that. What was happening before that? Right before that, the increased volatility ahead of these crashes BTC, and then what happened with crypto, and then what happened with gold at the same time, and other commodities? Was there a certain flow there? Was there a connection there? What happened with the dollar at that time? Was the dollar strong at that time? Now, Brian Armstrong's prediction is reviving investors' confidence. Okay, all right, to each his own. I suppose they could say that. I don't believe that anybody's just waiting like, what did Brian Armstrong say? Let me make a move. I don't believe that. I don't believe any one person or group of people, just unless they're like large asset managers pulling strings on major media all at one time, a massive concerted effort. I think people now are watching the catalyst. I do. A lot of them are watching the catalyst. And I'm talking about the smart ones. Smart ones are watching the catalyst and making certain moves. And I think other people are no disrespect. I think that they are moved by the actions of large asset managers controlling mainstream media, not so much just mainstream media yet. They haven't really put their claws in too much just yet, but social media, they definitely are manipulating a lot of social media, in my humble opinion. And we saw an article come out from a pro that was actually saying that, which is very interesting, that not more people are investigating such a thing, right? Given the climate of what's been happening in a lot of industries with social media. So yeah, that's what I think is going on at this particular time. No, but I believe that they saw companies were going to take certain actions, and so people were able to get out a little bit ahead of that, just in case it was a deeper correction. And because they know the catalyst, people's confidence remains strong. Not because someone said Bitcoin is going to go this here or there, but because the catalysts are telling everyone that's wise that Bitcoin still has an upward trajectory. That makes sense. I hope I didn't drag that out too much. My mind is a little bit tired, folks. My apologies, but I'm trying to convey things as well as I possibly can. All right. I appreciate once more. I just want to say I appreciate everybody being here. Anybody who has ever clicked the like button, I appreciate you greatly. You can never fathom how much I do appreciate that. If you watched the video, I appreciate you greatly. Members only section, I appreciate more than they could ever understand. I just want to say thank you to everybody. If you've done anything positive towards the channel, I just want to say thank you and let you know that. All right. So now, this article is titled UBS raises Q2 2026 gold price target to $3,600 an ounce, sees strongest gold demand since 2011. Let me repeat that again. This is that last part. Sees strongest gold demand since 2011. Why? Why is there gold demand? Gold is a protective asset, folks. What are they protecting themselves from? Can you tell me? Nonetheless, I like what's happening with gold, of course. I'm very confident with gold into the future. All right. It says UBS has raised a Q1 2026 gold price target by $100 to $3,600 per ounce, with the Swiss banking giant now expecting 2025 to see strongest bullion demand since 2011. Bear with me one moment, please. It says UBS, I beg your pardon, sorry, a little dryness in my throat. UBS analysts cited persistent U.S. macroeconomic risks, de-dollarization trend. I told you, see, it's still going on. They just don't cover it a lot. I haven't been covering it massively either. There's just been so much hot news lately elsewhere. But it says de-dollarization trends continue. All right now. And strong investment demand, especially from exchange-traded funds and central banks, as the main factors they see driving gold prices to new all-time highs. Quote, we see U.S. macro-related risks, questions over Fed independence, worries about fiscal sustainability, and geopolitics underpinning de-dollarization trends, and more central bank buying when they've already been breaking records. Says, unquote, they wrote, and quote, in our view, these factors will drive gold prices even higher. UBS also raised Q2 2026 forecast by $200 to $3,700 per ounce and added a new Q3 target at the same level. The analysts also pointed to sticky U.S. inflation. All right. So wait. They have a little bit more good information here. It says UBS raises 2025 ETF gold demand forecast from 450 tons to nearly 600 tons based on World Gold Council data, showing the strongest first half inflows since 2010. The World Gold Council does a good job. I've been reading their materials for quite a few years. I'm not going to say how many now. Somebody's going to be like, Mick, you're getting old. I don't look as old. I don't look as old as I might be. But yeah, they do a good job. If you want to check them out, World Gold Council. Okay. Also, Kitco does a great job. There's another there's a website also that does a great job. Another one, but I can't remember off the top of my brain their name. My apologies. So there you have it. Gold is looking good into the future. All right. And I hope I said 2026 in there. I don't know why I felt like I said, oh, it was because at the top. I'm just trying to make sure I said all the dates correctly. UBS raises Q1 2026 $100. Okay, and then it said now expecting 2025. That's why in my mind I was trying to make sure. I was like, wait, did I say 2025? I said 2026. I think I got it right. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.